Yo, yo, yo. Bet we live. All right, y'all. So we're gonna get straight into this. I just wanted to make sure we have everything set up. All right. So if this is your first time visiting the channel, I just want to say thank you. Please make sure to like and subscribe to the channel if you want to continue to get content like this. The goal of this channel is to educate you on how to make money in the foreign exchange market. And yeah. Oh, definitely. Hold on one second. Let me go ahead and put up this quick disclaimer really quick. That's rock for a second. All right. All right, let's hop into it, guys. All right, so today we're going to be going over the basics, how to get started, how to set up your first account, and things of that nature, okay? All right, so first things first, you need a broker, right? The broker I use is called PlexiTrade. There's going to be a link to this broker in my bio in the video description. So just click that link. It'll take you straight to this. If it's your first time trading, you're brand new to this, I highly recommend you start off with a demo account. If you've been doing this for a while, you're a little experienced, then, go ahead and hop on that live account. Once you click one of these, it's going to take you to this next page right here. Well, I already have an account, so I can't really show you what it would look like, but basically it'll just be like a way to sign up. So after you finish signing up, then you should see something like this. All you're going to do is hit create an account. This is where you can select live or demo. If you're going to do, whether you do live or demo, I definitely recommend you hit MetaTrader 4, then make sure you hit USD. If you have anything, if you're going to start off with anything less than 300, then you would select micro. If you have more than $300, gold or silver. Okay. Then the leverage, you're going to select 1 to 200 always. Why? Just because it's you know, the overall best is like right in between. So it's not too small and it's not too big of a leverage. All right. And then whatever amount you're going to put in your account. So like if this was a live account, so it'd look like something like this. 1 to 200, and then you would hit continue, and it would ask you to deposit the money into the account. All right, cool. Let's hop over to the charts. I'm going to just hide this for a second, just act like that stuff isn't there. And we're going to go over some basics that you need to know before we start trading. All right. Matter of fact, we can get rid of this. I don't really need that. I'm going to slide this over too. And yeah, there we go. All right. So first things first, let's start off with the question that I'm pretty sure all of you guys are going to be asking. How much money can I make in Forex? How much money can I make, period, right? And let's break this down. What I teach is you should never risk more than, so I'll put this never, 5 to 10% of your account in a single trade. Now, how much money you make depends on how much you can invest. All right. So let's start with 1,000. Well, actually, let's do it a little different, right? We're gonna do it like this: 15 an hour equals 600. 25 times 40 hours equals 1,000, and then 50 an hour is 2,000, right? So this is how much the average American is making, somewhere between $15 an hour to $50 an hour, right? This $50 an hour is definitely above average, but $15 an hour, you're working 40 weeks, you're going to end up with $600 at the end of the week after taxes, maybe 5 something or a little below 500, right? 25, same thing. You're going to end up with a little bit below 900 or like right at 9 and some change. So this is the reason I did this, is because this is a good foundation on how much you want to make, right? We want to be realistic. So if you really want to make money in the foreign exchange market, you need money to invest that can get you this type of money, right? So in order to make this, I recommend that you have, give me 1 second, because now I got to break this down by the day. Hold on 1 second. So what's 15 times 8? 120. 200, and then 50 times 8 equals, all right, 400. All right, so this is how much money you need to be able to risk per day. Can you risk $120? Can you risk $200? Can you risk $400 comfortably? If not, you shouldn't be trading at all. Because until you can get enough money in your account to risk this comfortably, then you should be able to trade. So this is my recommendation to you, right? You can start trading today, right now, but you need to have realistic expectations. You can't come in here with $100, $500 thinking you're about to make $10,000 in a week. That's not going to happen. It's just not realistic. So now, if you want to replace your $15 an hour job, or you want to replace your $25 an hour job, this is what you have to work towards in order to replace it. So you're going to take 120 times. There's about 20 work days in a month. So we're just going to round it to 60, right? All right. So before you quit your job and you try to do trading full time and things like that, or before you try to make big money with trading, this is how much money you should realistically have in your account before going to that next step. But let's break this down again. Most people are making this from their 9 to 5, right? They work 40 hours a week or more, and they're making between $10 to $15 an hour. And then they make, about $600 at the end of the week. If you're lucky, you find a nice, decent job paying $25 or more. Now you're making $1,000 a week. Cool, right? But after taxes, like I said, it's going to be what, 900 or a little bit below 900. Anyways, the math to get to the point where you make this type of money every week, you need to have this in your account, because you need to be able to comfortably risk this amount every day while you're trading. Now, all right, G, what do I do if I don't have this type of money? Like, all right, cool. If you only got, let's say, $500 to invest, right? What do I do? You compound. So what does that look like? If we take 10% of 500, we're risking $50 per trade. If we take 5%, we're risking $25 per trade. Our goal, oops, sorry about that. Our goal is to make 3 to 5 times what we are risking on every trade. So that means if you only have 500, you can make anywhere between, what's 25? 25 times 5 is 125. I'm gonna just do the math real quick. 125 to 250 per trade with a $500 investment. That's our goal. So even though you don't have $7,200, $12,000, $24,000 to invest, that's okay. You can start small with a $500 investment, and you can slowly build that. It's going to take a little while, but eventually you'll get to the point where, like, all right, now I started off only making 125 to 250 per day, or every other day. Now I done compounded my account up to, let's say if we got the 500, I said we get our account up to 1,000. That's 10,000. And I don't want this to be too long. I ain't gonna harp on this, but like now we're gonna risk 50, or we already know what we'll make with that. We're gonna risk 50 to 100 per trade, right? And again, our goal is to 3x or 5x our risk every time. So that means we already know what 50 times 5 is. So 100 times 5 is 500. Now I'm just with $1,000 in my account, I can almost replace my my 9 to 5 just with $1,000, right? But again, you have to compound your money because you have to account for losing days. This is not a fairy tale. Things aren't just going to automatically line up. We're not going to win every trade. The win rate is about 70 to 90%, right? It fluctuates. So this is why we need this money in our account for days where we lose 2 to 3 days in a row, right? All right, cool. With a 1 to 5 risk to reward ratio or strategy, even if I were to lose 3 days in a row, if I win one, it accounts for those 3 days I just lost. So y'all can screenshot this if you want. This is basically the biggest question that everyone asks me. How much money can I make in this? How fast can I make the money and things like that, right? All right. Now, boom. I'll delete all this. All right. Now we're going to go over the basics of the market. We just went over our compounding risk to reward strategy. Now we're going to go over the basics, how the market moves. So understanding the basics. All right. So the first thing we have is what's called a continuation, right? This is when the market is obviously continuing in one direction, whether it's up or down, right? First one is a continuation. It's very on point, right? The market is clearly showing that it's going up. It'll pull back, go up, pull back, go up. Nice structure, nice and easy to follow, right? The next one is called a range. A range is when the market is bouncing back and forth between 2 points. This is called a range. Last but not least, we have what's called a reversal. So the market is going up, boom, boom, right? Hits this, boom, boom, and then it just starts going in the opposite direction, right? Let me put reversal. These are the three main ways the market moves every day, or every week, every month, every year. It goes up, it goes down, it goes up, it goes down. It's common sense that nothing goes up forever, right? Eventually things must come back down. So your job is to find areas in the market that give you the best possible chance to make money, right? Now, before we go over that, these are the three main, so I'll put three main movements of the market. What is that? All right. I'm gonna let this sit for a quick second. If y'all want to screenshot this, three main movements of the market. By the way, this is unscripted. This is live. So if I stutter, if I whatever, just bear with me. I'm giving this to y'all live and direct. All right. Underneath the three main movements, actually, let me keep that there. We have, give me 1 second. All right. Underneath that, we have 6, you could say minor moves. These moves are what continuously happens like almost every day or every other day in the market. They happen over and over and over again. And these are the ways you can catch small movements, right? The first one is called a breakthrough. So if this is resistance, let's just say this is resistance. Price is it just broke through. That's it. So all this, the breakthrough. All right, the next move is called the breakthrough and retest. So price is going up, breaks through, retest, meaning that it comes back and touches the area it just broke through, and then it goes further up, right? So I'm just gonna put BNR for this. BNR again stands for breakthrough and retest. The next one is called a breakthrough and a correction. So here we go, boom, boom. Price breaks through, right? But it has to correct the movement it just did. It might have shot up too quickly or whatever. It comes all the way back down, makes like a double bottom. Sometimes it goes a little bit lower. Then it shoots up and makes a higher high. This is a breakthrough and correction. All right, the next move is a false breakout. This is when price breaks through, but immediately comes back down. And last but not least, we have what's called a liquidity grab. So let's say price is going down. And then it shows signs that it's about to go back up. Right? It'll come do this little liquidity grab where it knows that buyers are waiting at this point, around this area. It'll just come and spike down just to knock all the buyers out. And then it'll slowly start heading back up and it'll go bullish. So these are ways you can capitalize off of trade entries, right? These are the moves that the market shows you over and over and over again. You just have to put yourself in a position where you can catch the best possible trade for yourself, right? If you're looking for a buy, it needs to make sense. You need multiple confluences before you get in for a buy. You need multiple confluences before you get in for a sell, right? It can't just be like, oh, price is going up, so I should buy it. Like, nah, you gotta find where is the best area to buy. So boom. Again, we have a breakthrough. We have a breakthrough and retest. We have a breakthrough and a correction. This is when price breaks through, but comes back to either like the place, like this is like the base before it broke out, or sometimes it'll just go to another low. Eventually then it'll come and break back above this resistance area. You have a false breakout when price appears to be going up, but immediately shoots back down. And then you have a liquidity grab. I'm gonna give y'all a second. I'm gonna let y'all screenshot that. Hold on 1 second. All right. Cool. Now I'm gonna show you real life moments where these things happen, so y'all can get an idea as to, oh, okay, now I get it. Like, you get what I'm saying? So you can connect the dots. Man, I should have just hit back on all this instead of clicking everything. They should have a function like where you could select multiple and just delete everything, but don't mind me. I'm just chatting to myself. All right, y'all. So now we could get into the charts and let's go show that. So the first one I'm going to show you is a breakout. So where is it? Where is it? All right, cool. This is a breakout, right? Price came to this point and went the opposite direction, right? As soon as price got here once, technically 3 times, price came in this area and then dropped back down, right? Meaning that there's sellers in this area. Then right here, price broke through, never came back to retest, and it just shot up. So this is what's called a breakthrough. This is when the buyers are in super control of the market, right? People are pumping a lot of money into the market. Who knows? It could be a number of things as to why buyers are in control. But just know, if you see things like this, buyers are in control. All right, the next thing is a breakthrough and retest. So let's go back to gold. And let's find, okay, cool, breakthrough and retest. So this is a breakthrough and retest. This red zone was resistance, right? When price hit this, it dropped down. This is actually a daily resistance. So price broke above the daily resistance, came back, retested, and then took off. All right. Then the next example we have is what's called a breakthrough and correction. So as you can see here, this was the high, right? I like to count the body as the close of the body is the high. I don't really like to count the wicks. But anyways, price broke through with this big bullish candle, and it could have stopped right here where this red line is and then pushed up. That would have been a breakthrough and retest, but it decided to do what's called a breakthrough and correction. So with the breakthrough and correction, it came back to the lowest bearish point right here before taking off. So this is what's called a breakthrough and correction. Now we're going to hop back to US 30 and show you what a false breakout looks like. All right, cool. So as you can see right here, price was going up, going up, going up, going up. This is resistance. Price broke above it. Then price immediately dropped back down, making this a false breakout. Knocking out all the buyers, right? All the buyers were assuming that we were going to get in here, we're going to get in here. But no, like the sellers came in strong. Could have been a news event. Trump could have spoke. Powell could have spoke. Could have been anything, right? Boom. And the market just dropped. And then last but not least, we have what's called a liquidity grab. So I'm going to show y'all what this looks like. Delete all these. All right, so a liquidity grab is this, what I was talking about right here. So resistance, or I should say support, is like right here, right? This is all support stuff. Once it makes a higher high, this becomes support. So price broke below this, and we could even put it right here as well, because this is the lowest. Price broke below this, and then it swept all the buyers out of the market or out of the trade. A lot of buyers would have been waiting for the moment to buy right here, right? But I'm going to answer your next question in a second. I just want to explain this, right? A lot of buyers were sitting right here in this area as well as down here, waiting to buy gold. The banks and these major hedge funds are in control of the market, and they said, it's a lot of buyers sitting right here. Let's go knock them all out of the game and get this money. So let's look at this in real time. And this is where confluences come into play, right? We're looking at the 1 hour chart. Now let's go down to the 5-minute chart to get a better idea as to what exactly happened. So price came all the way down here and stopped. Right, so we scroll over. All right, so we can see right here, we got some support right here between this point and this point right here. All right, and then we have support right here in this area as well. So we could just mark this up. All right, so we have two support areas on the smaller time frames. This is where confluence comes in, right? I need an indication that shows me price is ready to buy. And I got that indication from this second zone, not this first one. I didn't get no indication until right here. Boom. Big rejection off of this. Almost engulf half of it. Well, a little bit over half of the candle. There's a candlestick pattern name for that. I just forgot it at the moment. But it also created 3 white soldiers. And if you know anything about trading, see, this is why you got to learn. Like this ain't something that you could just do overnight. 3 white soldiers pattern. A 3 white soldiers pattern forms at the end of a bearish movement, right? Price is going down, and then you have 3 consecutive bullish candles signifying a potential reversal. These candles can only be taken, well, I'm not going to say only, but if you see candles like this form off of a zone, they are much stronger than them just forming in the middle of nowhere. All right, so boom. So we went over all of the ways that the market, all the different moves that the market can make, right? Again, the 3 major moves, we have the continuation, we have the range, and we have the reversal. Underneath those 3 major moves, we have the breakthrough and retest, the breakthrough and correction, false breakout, and a liquidity grab. Now, I'm going to put y'all on my prediction for this week. So and I'm gonna let that sit right there for a quick second. I'm gonna go get some water. Be right back. Give me 1 second. All right, appreciate it. I'm back. So my prediction for this week, I think gold is going to continue to go bullish unless Donald Trump hops on the news and says something like we're going to war, or we're having another trade war, or something happens with our economy where the dollar gets stronger. If the dollar gets stronger, gold goes down. If the dollar is weak, gold goes up. We're supposed to be backed by gold, but I don't know how true that is. All right, so this is my prediction for this week. Let me show y'all. So boom, this is our hourly resistance. Bang. Then we gotta go down to the 5-minute. Okay. Just marking up these charts real quick. All right, boom. All right, so this is what's gonna happen, y'all. Where we at with this? And All right, so the most price can pull back. Hold on, my bad. 25, 1, 2, 3. All right, so the most price can pull back to is down and around this area. That's the most price can pull back, right? I highly doubt that's going to happen. My personal prediction, I think price is going to come to this area right here, and then it's going to bounce off. So I'm definitely bullish with gold for this week. Now, to answer that question again about how much money I can make, right? So let's just go over that one more time. I'm gonna make this super realistic for y'all. If you got $1,000 to invest, you're gonna risk 5% or 10%. If you want to do the 10%, that's $100. 100 divided by 10 equals $10. So this is how this would look, right? You will go long right here. As soon as price hits this and shows you some type of confirmation that it's going to go bullish, the next thing we would do, we would aim for 50,000 and we would be risking 10,000. This is not money, this is points. So gold is a little bit different than some other pairs, right? You see these numbers on the right? These are points. For each point gold moves, if you only have $100 to risk, you have to divide that by 10. And each point is going to equal to $10, right? So if I'm risking 10 points, that equates to $100. If I'm trying to make 50, 10 times 50 is what? $500, right? So if you had 1,000 to invest, you would risk 5 or 10%. 100 divided by 10 equals $10 per point. We're trying to get 50 points this week from gold, right? If you only willing to risk $100, you can make up to $500 off of one trade. Now, if you got a little bit more, I don't know y'all account size, I don't know what y'all working with, but if you had, let's say, $10,000, then you would risk 1,000. 1,000 divided by 10 equals 100. Oops. Now, if you could make the 50 points, 100 times 50 equals 5,000 off of risking only $1,000. So you get where I'm going with this on how you can make a lot of money. This is the mindset you have to have when you're in trading. Like, just think about it like bullets to a gun, right? The reason we're dividing our account up into by 5% or 10% is because we want multiple chances to make this money. If we risk 50% of our account in one trade, it's going to be harder to get our money back versus risking 5% or 10%. So, but yeah, guys, this is my play for the week. I'm bullish on gold until the market shows me otherwise. My prediction is that price is going to come back here and then it's going to shoot up. I showed y'all how to create an account. I showed y'all, oh, I gotta show y'all, hold on one, I almost forgot this. I gotta show y'all how to, damn. I'm gonna have to do that in another video. I gotta show y'all how to make a trade using MetaTrader 4. I'm going to definitely do that. But yo, I appreciate y'all for stopping by. Let me make sure I don't have anything else to go over with y'all real quick before I end this video. Oh, actually, I might have. If you got a laptop, I might be able to show you how to use MetaTrader 4. Let me see if I got it on here. Nah, I'd rather show you with the phone. Damn. Hold on, give me 1 second. I might be able to show y'all. Yo. Yo. Hello? Damn, I don't know if y'all can hear me. I unplugged my microphone. Hold on 1 second. Oh, I bet. Y'all can hear me. All right, cool. So. Bet. Yes, sir. All right, we tapped in now. So I'm going to show y'all an example using this little. All right, y'all. So I'm going to use this little demo account to show y'all how to place a trade. So you're going to come here. Oh, this small. All right, so you're going to hit new account. You're going to hit log into an existing account. And then you're going to select live if you're using real money and demo if you're using a demo account. Once you log into the account, you're going to come here. It's going to be a whole bunch of different pairs. You're going to hit the pencil sign on the top left and delete everything you don't need. And you're only going to add these. These are the only things I trade. US 30, Bitcoin, and gold. Then you're going to hold down. Let's say we're going to use gold as an example. You're going to hold down gold with your finger, and then you're going to hit trade. I'm skipping steps. Forgot to show you what this looks like. You got to go to the App Store first. My bad. Type in MetaTrader 4 on the App Store. And you're going to download this, and then boom, you're ready to go. All right, so again, first things first, you got to get your broker. After you get your broker, you're going to download MetaTrader 4. Once you get MetaTrader 4, you're going to use your login credentials from your broker, from the account you created, and then you're going to put them into MetaTrader 4. And then you're going to be able to trade. If you want to know how to trade, all you got to do is go to the pair that you want to trade. So we're going to use gold again as an example. Hold it down with your finger until this window pops up at the bottom. Then you can hit trade. From here, it'll let you hit sell or buy. You see that where underneath it says market execution? You can delete this and change it to whatever lot size that you're going to be using, right? So just remember, a 0.01 is $1. So you're going to be making $1 per point that the market moves up if you're trading gold. 0.10 is $10 per point the market moves up. So if the market is at 3,585 and it goes to 3,586, you would make $10 if you bought it at that price. Right? Once you select your lot size, you're going to hit buy or sell. And then from there, you're going to hit, put your stop loss in and everything like that. I can't really show you anything like that because the market is closed right now. But yeah, that's the basics of everything. Also, if you hold this down and you hit chart, you can trade from the chart window as well at the top right. But guys, that's it. I think I went over everything in the video. If you have any questions or concerns, just reach out to me via DM, or you could reach out to me on YouTube. I want to thank everybody who tuned in. Again, we're going to go over the play one more time for the week. The play for the week is gold. We are going to be bullish on gold. So if this is your first time trading and you want to make some money, you definitely are going to be able to make money this week. I'm going to go live on this first trade. So, you guys can see it in real time, how to make this money. I'm like, damn, I should have listened to G. I should have bought gold. Dang. Don't be that guy, man. All right, y'all. Deuces. And again, thanks for tuning in. Make sure y'all subscribe. Peace.